Welcome back. You're still tuned into Market Fatafat on ET Now, and this is a show where we discuss all the stocks that are buzzing in trade today. On the technical side, we are now joined by Mr. Nilesh Jain of Centrum Broking. Nilesh, thank you so much for taking your time out and joining us here on ET Now. And Canara Bank, that's the first stock that you've picked for us. Tell us, where do you see the stock headed on the charts?
Very good afternoon to you. So if you see PSU banking space as a whole, we have seen a good momentum today. In fact, last couple of trading sessions, we have seen good momentum across all PSU banking stocks. If you see Canara Bank, this particular stock, we have seen good build up on the long side today with an OI addition of more than 2%. On technical front, the stock has given a multi-month breakout and it has crossed its important resistance mark of 115 as well. So from here, we are expecting a follow-up move to continue towards 120 to 125 on the upside. With a stop loss below 112, Canara Bank can be added from a trading perspective.
Alright, moving on then to the next counter which is in focus, and that is Kotak Mahindra Bank. Now, for Kotak Mahindra Bank, Mr. Fani Shankar, who's the President and Chief Credit Officer of the bank, he has tendered his resignation from services of the bank, which is going to be effective from the close day of 21st July 2025. On the back of this management resignation coming in, Kotak Mahindra Bank is in focus today. In fact, it has recovered from the day's lowest point, but nonetheless trading in the red with cuts of 0.3%.
Okay, so that's Kotak Mahindra Bank for you, but ICICI Prudential, Kanishka, it reported its numbers. How are the numbers and what do brokerage houses have to say on this?
That's right. So after the numbers, ICICI Prudential Life, multiple brokerages, they've reiterated their buy stance on this company and in fact even raised their target prices, citing margin strength after those Q1 numbers. And this is on the back of an improving product mix for the company. Now, the firm reported a stable APE and VNB, while margins, they expanded to 24.5%. This was aided by cost optimization and a favorable product mix, as I said. Now, especially strong traction in protection and non-linked savings was seen. Brokerages, they've seen continued improvement driven by channel expansion, operating leverage and margin enhancement over FY26 to 28. If we take a look at how they're rated the company, now Antique, that has maintained a buy stance with a target price of 715. Nuvama also has a buy stance and has raised the target price to 770 rupees from 760 earlier. Motilal Oswal also, on the other hand, has a buy call on the stock with a target price of 780 rupees. Overall, the brokerages project 10 to 13% of CAGR in APE, VNB and EV through FY25 to 27. Hence, the stock remains in focus. Now, despite the positive brokerage reports that we have seen, the stock continues to be in the red territory today.
Absolutely. ICICI Prudential down over 2.5% today on the back of the kind of numbers that it reported. But shifting focus to the IT sector then, and let's put the spotlight on Tech Mahindra. It will be reporting its numbers later today, and we are expecting subdued set of numbers from Tech Mahindra, where revenue growth is likely to decline by about 1% on a sequential basis in constant currency terms. Muted recovery in telecom and manufacturing. These segments, remember, contribute nearly 50% of the total revenue for the company, and muted growth in these segments is likely to result in contraction as far as revenue growth is concerned on a sequential basis. Margins too could contract by about in fact, margins could rise by about 20 basis points, supported by lower subcontractor costs and SG&A efficiency. Weak revenue growth might limit upside for the company in this quarter, and deal wins, meanwhile, are likely to pick up pace in the earnings that the company is likely to report today. Management sees sustainable TCV baseline at about $600 to $800 million. So on the back of Tech Mahindra, which will be reporting its numbers, the stock, of course, ahead of its numbers, is trading with gains of nearly 1.5% as we speak.
All right, reporting its Q1 numbers. Besides Tech M is also Wipro. The IT giant Wipro is also set to report its Q1 numbers. And my colleague Pulkit is standing by with the details of what to pencil in for Wipro's numbers. Over to you, Pulkit.
After TCS, HCL, Tech Mahindra, now it's time for Western India Palm Refined Oil Limited, that is Wipro. So if we talk about the Q1 expectation of Wipro results, so for revenue in USD terms, we are expecting around minus 1.1% dip. For INR terms, around minus 2% dip. For EBIT, around minus 2.5% dip. For EBIT margin, 16 basis point dip, and for profit after tax, around 9.5% dip. If we talk about the segment-wise expectation, BFSI and healthcare may remain good and it can provide the good cushion to the margins. But when it comes to the manufacturing, tech and communication, they will be soft and they might hit some on some margins. If we talk about the deal pipeline, it would remain solid, but when the revenue conversion comes in, it may remain sluggish. For the guidance that company provided last quarter for FY26 quarter 1, around minus 3.5% to minus 1.5% drop in CC revenue growth was expected. Now it would be good to see how the company is shaping up with the results. If we talk about the key monitorables in the management commentary, FY26 guidance, what company is providing would be great to see. Update on the Marelli bankruptcy impact. Marelli was one of the client, so how it is impacting to the business. The discretionary spend from the clients, the headcount and attrition trend, and most important, the tariff and geopolitical tension, how they are shaping up with the business and how it can be helpful. So it would be great to see how the company is performing and how the share will perform.
So all eyes will be on Wipro, which will be reporting its numbers, and Tech Mahindra, which will be reporting its numbers later today. We're shifting focus to Dixon Tech then. Rabinder, the stock is up nearly 2% in trade today. But what is the news flow here?
Well, as Dixon Technology is in focus in today's trading session, where company has entered into a binding term sheet with Kunsan Q Tech Macro Electronics and its shareholder for the proposed acquisition of aggregated of 51% shareholding in QTech India. And apart from this, Dixon Technology has also entered into a binding term sheet with Chongqing Yuhai Precision Manufacturing to form a prospective joint venture in India for carrying on the business of manufacturing and supply of precious components for laptop, mobile phones, automotive and any other product with both parties agree in India. So back of this all this news flow, Dixon Technology is in focus and the stock is holding a gain of approx 2%.
Alright, moving on then to the next counter that is in focus. So you picked out LIC Housing Finance for us, and this counter has been surging for the third straight session. Nilesh, tell us what do you see in the charts for this one?
Housing Finance, after a long time, we have seen a kind of a momentum, I would say, and this particular stock is already trading well above its long-term 200-day exponential moving average. And today, in fact, it has given a good breakout from its inverse HNS pattern, and also it has broken its important falling trend line as well. So from a short-term perspective, 660, 680 kind of levels can be seen on the upside with a stop loss below 620. LIC Housing Finance can be bought. Even if you look at on derivative front, we have seen a lot of short covering today. The volume attraction is quite higher than the average volume. So given this kind of setup, I think there has to be a follow-up move in this particular stock towards 660 to 680 or maybe 700 plus kind of levels can be seen in the July series. So stop loss should be placed below 620 and LIC Housing Finance is a buy.
Okay, so that's a buy call coming in for LIC Housing Finance. But Kanishka, you have picked up NMDC for us, and I believe it's on the back of a brokerage report. Tell us, what does the brokerage house have to say?
That's right. So Antique has come out with the brokerage report on NMDC. Now it has maintained a buy rating with a target price of 86 rupees, citing a positive volume outlook that will be supported by strong domestic steel demand, it says. In fact, the brokerage has highlighted that improving evacuation capacity and expansion plans, they will aid higher offtake from FY26 onwards. Now, NMDC's strong operational strength and net cash position and the ongoing capacity additions, they also contributed to this bullish view, is the word coming from Antique, and that's why the stock is in focus today, trading more than 1% higher.
Alright, moving on then from NMDC to the next counter. Shesha, you picked out Adani Wilmar for us. Tell us what's the news flow here.
Well, yes, this one is also an earnings candidate. It reported its numbers yesterday post-market hours. The stock, of course, is tepid in trade today, down 0.4% as we speak. It reported highest ever revenue in the first quarter, which came at 17,060 odd crores, which is an uptick of nearly 21% on a year-on-year basis. The growth was driven by edible oil business, which reported a 26% growth YOY. And remember, raw material prices corrected nearly 10% over the last 3 months, and that also aided the numbers. But remember, the company says that it experienced a challenging quarter due to convergence of a couple of headwinds, muted consumer demand across geographies, strategic consolidation of regional rice operations. So these were the two primary reasons why performance of the company was muted in the quarter gone by. As far as the segment-wise performance is concerned, revenue from edible oil rose 26%. Industry essentials also posted a 12% growth on a year-on-year basis. The management also said that reduction in customs duty on crude edible oils is expected to react positively going forward. But of course, on the back of its results, the stock is tepid, 0.4% lower as we speak.
All right, moving on to the next counter, Varun Beverages, Nilesh. This counter hasn't done much, What do you see in the charts for here on? Is it a shorting call that you'd be giving on Varun Beverages?
Well, you are right. The stock has been under pressure quite some time, and if you now look at the development in last couple of trading sessions, we are witnessing a sort of a buying interest coming in this particular counter. It's not a short. I think there may be a trend reversal indication that we are getting. The stock has crossed the 50-day moving average with a good volume traction. Today we are witnessing over 1 CR volume has already been added. So given this kind of setup, we are expecting a strong pullback to continue, and this pullback may continue towards the levels of 500 to 520. So could be possible that we may see some bit of a profit taking at 520 level, but from current level, the risk and reward looks favorable for the long position. With a stop loss below 460, VPL can be bought from a pullback perspective.
All right, moving on then, trend reversal penciled in for Varun Beverages, but moving on to the next counter, which is Indian Bank. Now, the bank has said that it has reduced its one-year marginal cost of fund-based lending rate, or the MCLR rate, by 5 basis points to 9% effective from 3rd of July to make credit more affordable. So that's the first piece of news coming in, that the MCLR rate has been revised. And the second is that the bank has waived its charge for non-maintenance of minimum balance across all saving accounts, and that will be effective from 7th of July. On the back of the reduced MCLR rate, Indian Bank is in focus, trading almost with a gains of 2%.
Okay, so the stock is gaining nearly 2% in trade today, but Rabinder, trend is also in focus on the back of a Motilal Oswal report. What is their target price and what are they saying?
Yes, Motilal Oswal has come out with a note on trend, and they have maintained a buy rating, but they have hiked target price to rupees 6,650 as compared to earlier target price of rupees 6,600. They say that the aggressive expansion continues to drive growth for the company, and back-ended strong store addition in Zudio should drive growth for the company in FY26. They continue to like trend for its robust footprint addition, strong double-digit growth, long runway for growth in star, and potential scale-up of a new categories. Motilal said that they are building a FY25-28 CAGR of 21%, 20%, and 18% revenue, EBITDA, and PAT CAGR. So back of this note, trend is in focus.
Alright, so trends in focus on the back of that. But Nilesh, coming to you, Paytm is what you have picked out for us. Tell us, what do you see on the charts for Paytm? Now, that counter is up and away almost 2% in trade. In fact, in the last 1 month, it has moved up 15%. What do you see? Do you see more momentum in this counter?
Right, so today being a 5th consecutive days of gains for the Paytm, the stock has also crossed its multi-month resistance mark of 980, and after almost a span of 7 months of consolidation, the stock has given a good breakout on the chart. So structure wise looks positive, good build up is happening on the long side, and we can expect sort of a short term follow up move to continue in this particular stock towards the levels of 1050 to 1070. So with a stop loss below 970, Paytm can be added on declines. From a trading perspective, looks positive.
Okay, so it looks positive from a trading perspective. That's the word coming in on Paytm. We need to slip into a very short break, but we'll discuss many more buzzers on the other side. Don't go anywhere.
Fatafat, where we're getting you all the top buzzers in trade. Let's resume with all the stocks that are in focus then. Kanishka, Oberoi Realty, this one's on the back of a brokerage note that has come out. Take us through the details of this brokerage note.
That's right. So Motilal Oswal has reiterated its neutral rating on Oberoi Realty with a target price of with a revised target price of 1,850 rupees. And the brokerage expects pre-sales to grow 46% CAGR over FY25 to 27. This would be led by launches in Thane, Worli and Gurugram is what the brokerage is saying. Now on the commercial side, lease rentals could grow 29% CAGR supported by full occupancy at Commerce 3 and the new Borivali Mall is what the brokerage is saying. In fact, on the hotel revenue side, that's the brokerage says that it may more than double with the addition of Marriott and Ritz-Carlton properties. These are the two properties on which the brokerage is bullish. Now, while the growth outlook is solid, Motilal believes that most of the positives are already priced in and further upside hinges on new project wins. So, on the back of this brokerage note, the stock continues to remain in focus, though trading nearly around the flat levels at this point.
Okay, so a bit of realty in focus on the back of that brokerage report, but shifting focus to the real estate sector then, and Brigade Enterprises, that one is in focus because Buzzworks, which is the arm of Brigade Enterprises, has now announced its latest preeminent center at Mindspace Business Park, which is in High-Tech City, Hyderabad, and this is spread around 50,000 square feet. So on the back of this new project launch that has come through, Brigade Enterprises continues to be in focus today. In fact, the stock is up over 2.5% as we speak.
Alright, that's Brigade Enterprises in focus. But moving on to the next counter, this is IDBI Bank. Take us through what does the chart say for IDBI Bank. In fact, it is trading up almost 2.5% in today's trading session itself. And it has given some decent returns in the last 6 odd months as well. What do you see on the charts from here on?
See, IDBI, in fact, if you just pull up last 1.5 year chart, you can clearly see the stock is gradually inching higher. And it is also on the verge of a breakout as well on the upside, which is placed at somewhere around 105. So if it breaks 105, then the next target would be somewhere around 150 to 120. But looking at the overall structure, I think we can expect a gradual upward to continue in this particular stock. One can go long with the stop loss below 96. The immediate target would be somewhere around 104, 105, and positional target comes somewhere around 115. So it's a buy. We are witnessing some positive development in this particular counter and technical front. So looks positive from a short to medium term perspective.
Alright, moving on to the next counter that is in focus today, and that is Precoal. Precoal has entered into a technology license agreement with Domino SLR on 14th of July. This agreement will enable Precoal to manufacture, distribute and sell the switches, throttle and allied products for the use as original equipment in the two-wheeler as required by the customers. On the back of that, Precoal is in focus. It has given up all the morning gains, as you can see. It is trading at the day's lowest point right now with cuts of 1.5%.
But another stock that is in focus today is Federal Bank. That one is up nearly 1.5% as we speak. It is trading near that 215 odd levels. Nilesh, from 215, do you expect 250 anytime soon?
Right, so we are very much bullish on overall banking space. As you can see, not only PSU banks but also selective private sector banks are doing good, and Federal Bank being one of the outperformer within this space. So looking at the overall structure, we are expecting follow-up to continue towards 220, 225 levels on the upside. Quite possible it may hit a new record high as well in the July series. So it's a buy with a stop loss below 206. So 206 slightly at a lower level. So better to buy in a staggered manner or wait for some bit of decline. Near about 212 to 210 could be a good entry point. And immediate target would be 220 and followed by 225 to 230 from a short to medium term perspective.
Alright, moving on then from Federal Bank to Jindal Steel. Kanishka, tell us what's the news flow on Jindal Steel?
That's right. So Jindal Steel, it is in focus today after the company announced the resignation of its Chief Financial Officer Mayank Gupta effective July 15th, that is yesterday. The company did notify the stock exchanges under the SEBI disclosure norms, and the resignation letter that has been made public. The street is now watching closely for the updates on CFO succession plans and the management commentary thereafter. So the stock continues to be in focus and is trading about 1% lower at this point.
Yes, PL in focus on the back of that, but we also have Adani Ports, which Nilesh has picked up for us. Nilesh, are you bullish on this counter?
Right, so structure-wise, Adani Port is also looking strong on the chart. Constantly, we have seen a good formation of a high top and high bottom formation. And also, if you see on derivative front, we have seen good build-up is happening on the long side. Technically, it has given a good breakout on a small time frame chart. But structure is hinting that we are likely to witness a good momentum in this particular counter towards the levels of 1480 to 1500 from a short-term perspective. So with a stop loss below 1441, Adani Port is a buy.
All right, so that was the last talk for the day. Nilesh, Kanishka and Ravinder, thank you so much for taking the time out and taking us through all the buzzers in trade. But before we wrap up, the Maharashtra government is making efforts to fully leverage the potential of Vadhavan port, improve connectivity and make it into a port city. Now, JNPA chairman tells ET Now that they will constitute a 3-minister panel to analyze the feasibility. Also shares his view on the potential listing of JNPA. Here's an excerpt.
The construction has started and the timeline is 2029-30 when the first vessel call on to the Vadhavan. Definitely to leverage this port fullest, we should have a proper infrastructure around it. So this infrastructure thing is to be done by central government and state government after deliberation with each other. Maharashtra government is aware of it and there were series of meetings how this port can be leveraged to the fullest for the development of the state as well as India. So we have decided to have some good connectivity to this Vadhavan. As you are aware, 248 National Highway connecting Vadhavan to Tawa Junction, which is the existing Mumbai-Ahmedabad road, that is built by the NHI. And then as today also and previously also already declared by Honorable CM that this particular Tawa junction is also connected to Sahyadri road at Nashik so that the northern Maharashtra and Vidarbha and Marathwada will connect to this Vadhavan port. All the big corporations have gone for the listing. Government has not told us to do so. But in future, anything possible. I will not rule out the possibility, but at present, there is no plan.
That's the view coming in from chairperson of JNPA. But that's all the time we have on this edition of Market Fatafat. But don't go anywhere. Closing trades will take you through the last hour of trade.